Okay, good morning, good afternoon, and evening, everyone, and welcome to our first Go Mining institutional live stream here on LinkedIn. I'm Fakul Mia, Managing Director at Go Mining Institutional, and it's a pleasure to have you with us today. I'm joined by my colleague Nico. Nico, do you want to introduce yourself?
Yeah, sure. I'm Nico Smit, and I work as a research analyst at GoMining Institutional, providing market insights through articles, but also through masterclasses and webinars like we're going to do today.
Awesome. Thanks, Nico. So today, Nico is going to give us another one of his amazing masterclasses on the current state of the market. But before that, I couldn't but help mark that yesterday was the 15th anniversary of Bitcoin Pizza Day. So, for those that aren't familiar, it commemorates the first real world transaction using Bitcoin. So, all the way back in 2020, Laszlo Heinix, I'm sure I'm pronouncing his name incorrectly, so apologies, Laszlo. He paid 10,000 BTC for two pizzas, which at the time was worth about $40. As of yesterday, that same amount would be valued at over 1.1 billion, a powerful reminder of how far this asset has come. Fittingly, Bitcoin also hit a new all time high of 112,000 yesterday, an incredible milestone that underscores Bitcoin's evolution from a fringe innovation to a globally recognized institutional asset. At Go Mining, we've been proud contributors to that journey, building the infrastructure layer that powers Bitcoin. We've grown to become the largest retail mining platform globally, managing just under 8 million terahash of mining power, equivalent to about 1% of the Bitcoin network, and serving over 3 million users across the globe. On the institutional side, our recently launched business, our mission is clear: to simplify and professionalize access to Bitcoin's infrastructure layer, offering eligible investors efficient exposure to the economics of mining without the operational burden of running machines or managing hosting contracts. Our flagship offering, the Go Mining Alpha Box Fund, continues to attract strong interest from professional investors. We've been meeting allocators across the world recently: Singapore, Miami, Dubai. And what's clear is that the conversation has moved on. It's no longer why Bitcoin. Now it's how can I participate in this infrastructure in a smart and scalable way. Looking ahead, we're excited to headline sponsor at Bitcoin 2025 in Las Vegas, which is occurring next week. We'll be showcasing both our retail and institutional platforms with a major presence, including the Go Mining Satoshi game, our own spin on the Squid Game challenge. Very interesting. Definitely come and take a look. We're also hosting an exclusive Go Mining lounge for curated conversations and interesting cocktails. And we'll be speaking across several keynotes and panels. If you're attending, come find us. We've got some great giveaways and would love to connect. But without further ado, let me hand over to Nico. He's going to walk us into a deep dive into the latest macro and Bitcoin market mining trends.
Thank you very much, Fakul. And I think Las Vegas is going to be amazing. It's going to be the biggest Bitcoin conference. Up till now, they aim for 30,000 people, so it's going to be massive. And I think with the bull market where we're in now, like it's going to be a very good atmosphere.
Definitely. It's actually my first time in Vegas, so I'm certainly looking forward to it.
I was there once, but I think it's going to be a different experience now with the conference and being there with so many Bitcoiners. So looking forward to that. But today I want to take everybody along and provide a Bitcoin mining state of the market update and provide also a future outlook. And I have different points on the agenda. I wanted to start a bit with the market sentiment, look at the roller coaster we've been through, touch upon price development. Obviously, price is important for miners. Then go into network hash rate, the growth of the hash rate, the difficulty and the adjustments that have been happening throughout the year. I'll also zoom into to block rewards, so what our miners are earning, and then specifically look into transaction fees, what has been happening over there. And finally, I'll look at the revenue that miners are making, which we call in the mining space hash price. So to start off with the market sentiment and Bitcoin price, as I mentioned, has been quite a roller coaster. This year, when we entered 2025, Bitcoin was at 93,500. And looking at the fear and greed index that measures the market sentiment, indicating whether we are in fear or whether the market is greedy, on a scale of 0 to 100, we were at 66 at the beginning of the year. But shortly, a few months later, especially after the announcement of the trade tariffs, sentiment dove all the way to extreme fear, because Bitcoin declined, and we hit an annual low of 74,500, and there was extreme fear in the market. But after that, Bitcoin started to recover all the way up till today, and as Vakul mentioned yesterday, we had an all-time high, and greed is starting to kick in again. So we're at 72 out of 100. And zooming out a bit, you can see that the fear that we've experienced this year, those low levels around 20, is very significant, because last time that happened was last year, when there was a prolonged decline in price. And before that, it was at the end of the bear market in 2022 that we saw these levels of sentiment in the market. The fear was did have a fundamental behind it, because we saw a 31% decline in April, March. However, this is not uncommon. We've seen 6 declines of 20% or more during this bull market run. So we started the bull market early 23. And during that time, we saw 6 times a drawback of 20% or more. And last year, we saw a 33% decline. So even if this occurs in the coming months as well, like a 20 to 30% decline, it won't invalidate the bull market that we're in. As mentioned, we saw recent new all-time highs. The previous all-time high was at 109,500, sorry, at January 20th, and now we broke through. Yesterday, we briefly crossed that $112,000 mark. So that's very bullish, I have to say. We started the year at 93,500, and that means that we added, or Bitcoin increased in value $70,500 year to date, which is a 90% increase, which is a very good performance. And if you look at the bottom that we saw in April, on April 7, within a month and a half, let's say, we rose over 50%. So that's a very remarkable recovery. It was only at the end of Q1 this year that Bitcoin was at number 9 of in the list of top 10 assets by market cap. Bitcoin at that time was at 1.6 trillion in market cap, with a price of 83,000. And over the last week and a half, Bitcoin has been blasting upwards, has been surging all the way to number 5. Currently, Bitcoin, looking at the market cap of 2.2 trillion, is bigger than Amazon and Google. So big giants that have been left behind. But also silver has been surpassed, which is something that Bitcoin celebrates, because Bitcoin is often compared to gold as the digital version of gold. So it's a huge milestone. In Q4 we surpassed silver for the first time, but now it seems like we've solidly passed that market cap of silver. A big driver behind the price surge over the last few weeks has been the spot ETFs. A lot of institutional capital has flown into in these Bitcoin ETFs. And over the last 5 weeks, $7.5 billion went into the top 9 Bitcoin spot ETFs. And currently, these top 9 they have 128 billion dollars in assets under management. So the institutional adoption has been driving price quite severely over the last few weeks. When we zoom out and go all the way back to 2011 and look at Bitcoin price cycles on a yearly basis, let's say, or these 4-year cycles with yearly candles. So each of these candles, these bars, they represent 1 year. You can see that history is rhyming very precisely, actually. In 2014, we saw a bear market, a red candle, so price declined during that year, followed by 3 bullish candles, 3 green candles, which means that price went up. And the same happened after the bear market of 2018. We saw 3 positive candles, 3 bull market candles, and it seems like history is rhyming because now we're in that 3rd year, 2025, and we're in the green. So it's very very particular, let's say, that we keep on rhyming these histories. It's also interesting to see that measured from bottom to top, that the previous 2 bull market cycles, it took 35 months and 36 months to go from the start of the bull market to the top. And right now we're 30 months in. So if history really rhymes, then I think we're up for some good months in 2025. And we'll have to see what happens next year, whether we repeat that history and go into a bear phase of the cycle, or whether we break the cycle this time. It is a different time than a few years ago because of the institutional adoption and also companies corporations putting Bitcoin on the balance sheet. So it's a different time, but I think we cannot go up forever. So it's likely that at a certain point we'll head into a bear market. But how deep that retracement will be remains to be seen because of the changing dynamics that we've seen. An indicator that I always appreciate when zooming out and determining where we are is the 2-year moving average multiplier. The green line that you see is the 2-year moving average, while the red line is the 5 times multiplier of that moving average. And every time Bitcoin price goes below that 2-year moving average, it's a good time to buy Bitcoin, to scale into Bitcoin, because it's undervalued. And every time it starts hugging that red line or crossing it, Bitcoin can be considered overvalued. And right now that green line is around 60,000, while the red line is around 300,000. Obviously, it's not a prediction of price or where price will go, but I think it's a good indicator to see that we are currently in neutral territory. So we're in the middle of this band. So the market is considering Bitcoin not as undervalued nor overvalued. So what are some factors that might influence price in the coming months? Obviously, there's more than these 5, but I think these 5 are quite key. So first of all, it's monetary policy. What will happen to interest rates? If these goes down, then it becomes cheaper to borrow money, and people will deploy more capital, and price will probably go up. And the same goes for the liquidity. So the quantitative easing or tightening by the Federal Reserve and other central banks will have an impact on Bitcoin price. Also, the institutional adoption, so these corporations adding Bitcoin to the balance sheets, the ETF flows, institutions investing in ETFs is going to be an important factor. we've seen how these ETF flows have been driven recent price action. Also, the global risk appetite or and the potential risk for a recession is going to have an impact. If the US or a global economy goes into a recession, then investors might be going into a risk-off position, and it might impact Bitcoin negatively, let's say. But there's also a chance, and I think Bitcoin hasn't gone through a real recession yet. But there is a chance that in a recession, people lose more faith in the fiat system, and they prefer hard assets like Bitcoin, and price could actually thrive during a recession. That remains to be seen. But if we go into a recession at a certain point, we can assume that it's going to have an impact on price one way or the other. Regulatory developments obviously have an impact. We've seen what approvals of the ETFs has done to price, how the market responded to the strategic reserve that was announced by the US. So any positive or negative announcements and regulatory developments will have an impact. And lastly, I think there's a lot of geopolitical tension in the world, so that can have an impact as well. What's going to happen in Ukraine or in the Middle East, or between India and Pakistan. So next up is the Bitcoin network hash rate. Before going into that, I want to shortly elaborate on what hash rate actually is. It means the speed at which mining hardware can perform a particular cryptographic operation called hashing. And the network hash rate is the total amount of computing power that is contributing to the Bitcoin network. And the hash rate is measured in different denominators. ASIC miners, or the machines that miners use, are usually measured, or the computational power is measured in terahashes. Companies and Bitcoin mining facilities, they look at their mining fleet and measure that in petahashes, and then the Bitcoin network as a whole is usually measured in exahashes, which is 1,000 petahashes or 1,000,000 terahashes. So we've seen that the network hash rate has been quite volatile. In 2025, we saw two drawbacks or declines of over 100 exahashes. And this is quite unique. It happened once before in 2024 after the halving, but 100 plus exahash decline is I guess the new reality, because the network is becoming bigger and bigger. But it's been volatile. It's going up and down in this new year. So we started the year at 807 exahashes, and we hit an all-time high of 935 exahashes on the 7-day moving average. This happened early May, and if we measure that difference, it's 128 exahashes being added to the network, which is almost 16% increase. Currently, network hash rate cooled down a bit, and we're at 878 exahashes, which is 71 exahashes more than the 1st of January, or 8.8% increase. So when comparing 2025 to previous years, you can see that if we take current hash rate, it's lagging behind a bit. But if we look at the all-time high, it's quite on par with how the network grew over the last few years. It's important to note that 2023 and 2024 have been record-breaking years. A lot of hash rate has been added to the network in those years. But if you look at that all-time high, 128 exahash was added, so that's quite on par with what we've seen in the last 2 years. If we look at the monthly hash rate growth, we've seen that in 23 there was an average growth of 20.8 exahashes. In 24, there was average monthly growth of 24.3 exahashes. And if we take the current hash rate, That average is at 14.2. But if we take that all-time high, we're again quite in line with what we've seen in the last year. We're adding 25.6 exahashes per month on average. If you look at the percentage growth rate, that's between 1.8 and 3.2, depending on which reference point you take. This is lower than the previous years. And the reason for this is that every time the network grows, it's harder to make a dent in the network percentage-wise. So if you add 100 exahashes to a total network hash rate of 100 exahashes, it grows 100%. But when the network is 800 exahashes and you add 100 exahashes, you only add 12.5%. So the bigger the network becomes, the smaller the growth rate in percentage will be, or the more difficult it will be to have a high growth rate in percentages. So what are some factors that influence hash rate growth? This I mentioned during the previous masterclass as well. We've seen ASIC efficiency, so the efficiency of the machines have been improving quite a bit. There's still a difference between the average network efficiency and the efficiency of the latest and greatest machines. So if more of these new machines come online that are very efficient and have a high hash rate output, that obviously will boost hash rate growth. The more efficient machines are, the less power you need to produce that same amount of hash rate. Bitcoin price dynamics, obviously if price goes up, margins go up for miners and more funds will flow into the industry. So if Bitcoin goes up or down, that has an impact on profits, on margins, and eventually on hash rate. Governmental incentives and regulatory clarity are also very important. We've seen the Middle East, various countries in the Middle East, and also Ethiopia, for example, welcoming miners with open arms. And once that happens, growth can go very fast. In Ethiopia last year, 600 megawatts was developed and dedicated to Bitcoin mining. So if there's more and more governments that have a positive approach to Bitcoin mining, that will stimulate hash rate growth. And the same goes for banning Bitcoin mining. Obviously, if there's countries banning mining, then it can have a negative or it can slow down the growth. There's also a big competition for power infrastructure, especially coming from the AI, high performance compute side. We've seen many big power lots being absorbed by these AI HPC data centers. There's even miners that have big power contracts that were originally dedicated for mining and that are now assigned to AI, high performance compute. So the competition for especially these bigger power blocks is a factor that slows down hash rate growth. Also, if there's going to be a potential supply chain constraint in the semiconductor industry, that might have an impact. We've seen that post-COVID, when there were some constraints, that it slowed down the amount of ASIC miners that could be produced. And also right now there's some trade tensions. So if these chip wars continue to be an issue between the US and China, it might have some slow down effect on the hash rate. And lastly, if electricity prices go up, then margins go down, and that could have an impact as well. Currently, gas prices are relatively low, but we've seen that when the Ukraine-Russia war started, that Europe went into an energy crisis and prices went up quite fast. If something like that happens, it has an impact on miners. It will reduce their margins and will have an impact on the speed of growth of network hash rates. So what's ahead? Here you see a chart of the one-day moving average of network hash rate. This is not a very reliable indicator because it's very volatile, but it is telling. And what we've seen is that the one-day moving average has crossed the 1 zettahash or 1,000 exahashes already a couple of times, and it's a matter of time before the more reliable moving average, like the 7-day and the 30-day, will follow. So what's ahead if we project 5 years out? Here I've done an exercise where I've looked at the nominal growth and projected that into the future. So I looked back 7 years, 5 years, 3 years, and 2 years, and I calculated the total growth, and then I calculated the annual growth rate. So if you look at the past 7 years, 793 exahashes were added to the network, which was an average growth rate of 113 exahashes. If that rate of growth continues all the way up to 2030, then at January 1st, 2030, the network hash rate will be around 1,372. On the other extreme, so at the bottom, I only looked 2 years back, where we saw a total growth of 542 exahashes, which was an average growth annually of 271. And if you project it out, starting this year all the way up to 2030, we'll be at 2,162 exahashes. The idea of this exercise is not to predict a precise number or a precise size of network hash rate, but it gives you a range of where the industry might go or where the network might go. So I think in 5 years from now, it's quite attainable that we will be around that 2 zettahashes. So next up is Bitcoin network difficulty, which is very closely related to network hash rate. There's difficulty adjustments being done by the Bitcoin network on an average about every 2 weeks. And this is to ensure that new blocks that are being added to the blockchain take approximately 10 minutes, regardless of how much computational power is devoted to mining. So here I try to visualize it. So if network hash rate goes up, the amount of computing power goes up, the time it takes to produce a block goes down. So it can take less than 10 minutes to produce that block. If that's the case, then the network will adjust its difficulty upward, so it becomes more difficult to produce that block, to balance it back to that 10 minutes. And as a consequence, this means that it's harder to earn Bitcoin per computing power. So you need more computing power to earn that same amount of Bitcoin. The other way is also true. So if network hash rate goes down, then the block production time takes longer. It can take more than 10 minutes to produce that block. The difficulty to produce such a block will go down, which will mean that it becomes easier to mine Bitcoin. So in 2025, we've seen that the majority of the difficulty adjustments were positive, and on a month-to-month average, we saw an increase of 2.38%. If you compare it to 2024, it's 2% less, so it's been going up slower than the previous year. Again, this has to do with the size of the network increasing. It becomes harder and harder to have an impact on difficulty. Also, the swings have been less aggressive or less volatile, let's say, than last year. So the upward adjustments were not as high as last year, but the downward adjustments also were less deep. So now we move into Bitcoin mining revenue. And Bitcoin miners, they make their money through block rewards, which are incentives that are provided to miners who successfully validate and add a new block of transactions to the blockchain. And these block rewards, they consist of 2 parts. The first is the block subsidy, which is a known, and then we have the transaction fees, which are unknown. And here you see a visualization of those block subsidies, the orange part. When the network was launched, miners were able to earn 50 Bitcoin per block. After about 4 years, that was cut into half during the halving event, the first halving event, and it went to 25 Bitcoin. And we've seen now a total of 4 halving events. And currently, the block subsidy is 3.125 Bitcoin per block. So this is programmed and adjusts automatically. So this is this block subsidies are a known. On top of this orange, you see the green little spikes. Those are the transaction fees, and you see as further down we go, so the smaller the block subsidy becomes, the more important these transaction fees are for miners. However, 2025 has not been a great year with regards to transaction fees. During the majority of the year, transaction fees were less than 1% of the total block reward. And if you compare that to 2024 and 23, that's very a very muted transaction fee market, let's say. In 23 and 24, we saw the launch of ordinals, a lot of ordinal inscriptions, and the launch of Rune protocol, which led to a high demand for block space and people willing to pay a premium to get their transaction prioritized and their ordinals inscribed. Currently, you don't see that many of these ordinal projects battling for block space, but also regular financial transactions have been slow in 2025. Here you see a screenshot of the mempool, which has been cleared during 2025 a couple of times. And the mempool is a waiting area for transactions to be processed. So each of these blocks represent a block on the blockchain. And there's transactions, usually there's transactions in line waiting to be processed. And when a mempool gets cleared, that means that all pending transactions were included in a block. And the consequence of this is that demand for block space is low, and therefore it drives down fees. So people or whoever wants to transact on the blockchain is paying very low fees to get their transaction included into the next block. If you look at the block with the arrow, the white arrow below it, you can see that there were a total of 353 transactions within the block, while an average block usually has around 4,000 transactions, I would say. And also you can see that the fee that was paid, a total fee of 0.003 Bitcoin, which is very low. Last year we saw multiple times that the amount of transaction fees was even bigger than the block subsidy itself of 3.125. So it's been on the fee side, it's not been fun for miners. Here you see another visual representation of the mempool, whereby you can see that in April 2024 was the last time that the mempool was cleared, but shortly after that, the amount of transactions that were pending spiked again. Currently, you see that as of 24, it's sliding down, and there's a few, not a lot of transactions being waited to be processed. What's interesting is that if you look at transaction fees, that in the past you've seen big spikes of transaction fees around market tops, or when Bitcoin was going to the parabolic phase and was getting overvalued, or the market was heating up. The reasons being that if this fear of missing out kicks in, everybody wants to buy Bitcoin, and there's a lot of transactions because of it. But also trading activity takes or increases, and traders are willing to pay a higher fee to have their transaction on the base layer processed quickly. So this is something to keep an eye on. The fact that the transaction fees are quite muted, to me, is a signal that we're not near a market top yet. Obviously, in order to evaluate the market, it's always smart to look at various indicators, not take one like the transaction fees as a single indicator. But I think it's telling that that we are not seeing the same spikes as we have seen towards the final stages of the bull markets in the previous two cycles. So moving to hash price, which is an indicator or a metric that miners use to determine their revenue. Hash price is the amount of dollars a miner can expect to earn per petahash of computing power per day. And this is a function of Bitcoin price, network difficulty, block subsidies, and transaction fees. Here you see a chart post-halving, so that big spike was at the halving event. And you can see that after the halving of 2024, hash price dropped all the way to a historic low. So we've never seen these low levels before of $38 per petahash per day. And last year we started crawling out of that low, historic low, and especially post election when Trump was elected, the market boosted all the way up to $60 per petahash per day. In 2025, hash price has been sliding and has declined to $41 per petahash per day. But currently it's recovering, and we're at $58 per petahash per day. We started the year at $56, so it's $2 up, or only a few percentage points. So if you didn't look at this price chart, or the hash price chart from the beginning of the year, not much has changed for you. What's interesting is when you compare the halving year 2020 to 2024, is that after the halving in 2020, hash price dropped from $160 to $70, which was a decline of 56%. And post halving 2024, we went from $103 all the way to that historic low of $38 per petahash per day, which was a 63% decline. Now, comparing these declines, 56, 63, obviously the decline was percentage-wise deeper in 2024, but it's not a significant difference. What is more interesting to see is that the recovery day, so going back or for hash price to recover back to the hash price at the halving, it took in 2020, it took 220 days to go back to that $160 per petahash per day. While now, post 2024 halving, we haven't been able to get back to that $103 per petahash per day. And we're almost 400 days post halving. So this prolonged period of suppressed margins has been tough for many miners. So what needs to happen for hash price to improve? Bitcoin, its price needs to outpace difficulty. So the price appreciation needs to be bigger than the amount of new hash rate that's being deployed. And this we saw in 2021 when price went up aggressively while the deployment of the machines couldn't catch up. And at that period, hash price went as high as $400 per petahash per day, which is an enormous high level. I don't expect us to go back to that 400, but there's signs already that we're moving into better days ahead with regards to hash price. Last year in Q4, we also saw Bitcoin outpace difficulty, and that led to hash price recovering all the way back to above $60 per petahash per day. And currently, Bitcoin price is also outpacing. So if Bitcoin price continues on its bull market trajectory and the market starts to get heated up, then we are likely to see hash price improve. For a reference point, if we want to go back to that 103 dollars per petahash per day at current difficulty levels, and Bitcoin would have to be at $194,000. So there's still a way to go before we are at those pre-halving hash price levels. So concluding, if we look at Bitcoin price, it's obviously very bullish. We're in uncharted territory, but it's also neutral, and it can be considered not undervalued or overvalued. Hash rate growth is very volatile in 2025, but it keeps on going up. Difficulty is increasing slower than the previous 2 years. This has to do with the size of the network. And the rewards are under pressure due to the halving, but also the low transaction fees. And then lastly, hash price is recovering very well, but will depend on the Bitcoin price and the price outpacing difficulty. So that's it on my part. With GoMining Institutional, we create not only masterclass, but also a lot of articles that are published on the website. So if you want to learn more about Bitcoin mining, it's not only market updates. Also, we go into more insights and trends in the industry. So have a look at the websites. So that's it, Fakul. Back to you.
Thank you very much, Nico. Great insights as always, and we're very lucky to have you. But everyone, yes, as you can tell, we remain incredibly excited about where the market is heading. The momentum around Bitcoin, mining infrastructure, and institutional engagement is stronger than ever, and we believe we're just getting started. Looking ahead, we cannot wait to connect with many of you in person at Bitcoin Vegas next week. Be sure to swing by our booth, take part in the Go Mining Satoshi game for a chance to win some cool prizes, and don't miss our Go Mining Lounge, an exclusive evening session for deeper conversations with industry leaders, investors, and our partners. We're also proud to be contributing to the agenda. Jeremy Dreyer, our Chief Business Development Officer, will be presenting Go Mining on a panel session, how virtualized mining is reshaping the Bitcoin landscape. Very interesting. And yours truly will be delivering a keynote on the enterprise stage titled Beyond ETFs, Mining for Bitcoin Yield, where I'll explore how Bitcoin mining infrastructure-based strategies are unlocking new forms of BTC yield. But before we wrap, a quick look ahead. Next month's live webinar will feature a very special guest who's deeply plugged into the regulatory landscape, both in Washington and globally. We will be diving into policy outlooks, insights from Capitol Hill, and the key market trends shaping institutional participation in this space. You definitely won't want to miss it. And as Nico mentioned, please, I encourage everyone to visit our website for the latest market insights and thought leadership articles. We have our Q2 market report dropping very, very soon. Mining the Future, how Bitcoin mining became a scalable, institutional, and global asset class, where we dive into macro trends, mining economics, and institutional sentiment, all through the lens of actionable analysis. Thanks again for joining us today. We appreciate your time and continued support. Stay bullish, and we'll see you all in Vegas. Bye bye.
Bye bye, everybody.